Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Thanks for joining us on today's episode of the Risk Intel podcast. I'm excited to have back with us today Niki White, who is the Chief Growth Officer at SRA Watchtower. Niki, thanks for being with us.
Absolutely, Ed. Happy to be here.
Niki, you've been out on the road recently, and you've been in the room with risk officers at a handful of financial institutions, really riding along with our implementation specialists as we've gone through this process of the risk maturity framework, self-guided self-assessment. And as part of these conversations, you've been helping, you've really gotten some great visibility into where are these risk managers and risk departments on their journeys. And I'm interested today to explore that a little bit and understand what you're seeing and what you've heard out in the field, and what lessons that could potentially be shared with other risk teams that are considering investment in this area and looking to advance their risk programs. So let's go back to a comment which you shared with me that caught my attention, which was you came out of a meeting recently and said, this risk professional said, "Wow, that was impactful." So flesh that out a little bit. What was impactful about that conversation? What caught their attention?
I would say what we're finding in the way that we approach working collaboratively with as a partner with our clients on their self-assessment of their maturity is that it is a self-assessment. We give them the framework. They have engaged with us with our SRA Watchtower risk maturity framework tool to perform that self-assessment. But because we're riding along with them, we're poking, we're prodding, we're challenging a bit and saying, are you really sure that you're as mature as you say you are? This is a self-assessment. You get out of it what you put into it. And what I'm finding that is a bit of a shift from some other experiences that we've had is how open and how welcome people are to say, let me rethink that a little bit. This is maybe what better or what good looks like. Maybe I'm not quite there yet. And I think that our experience, as we approach performing this self-assessment with our clients nearly 100 times at this point, that broad perspective to say, last week I heard this from someone, or an institution of similar size to you, or in this similar space to you was approaching it this way. Obviously, not sharing any names, but because we have that perspective across the country, across the industry, across the size spectrum, that we can really share what we're hearing out in the ground live as it's happening. And we're finding that the risk teams are very open to considering where they truly are versus where they want to be.
So you hit on this concept of a guided self-assessment and then a tool that exists and lives on after that conversation that is actionable and can grow with the organization, in contrast to a consultant that would come in, conduct an external assessment and drop it off and walk away. So that's a pretty, it's nuanced, but it's a pretty significant distinction there. And you use that self-assessment term, and that's what really kind of struck a nerve with me.
Absolutely. And so a few just recently, in the past couple of weeks, actually, institutions have engaged with us to perform this self-assessment, having already had a gap analysis, either as they're approaching $1 billion or as they're approaching $10 billion, where they had this external gap assessment where people come in and they look at their policies, they look at their procedures, and then they deliver the outcome of the report based on their perspective. And while those have value, what the feedback that I'm receiving from clients in these conversations is that it's a little bit harder to take action. They don't necessarily know all of the factors that went into the outcome of the report of identifying those gaps. So they don't have as much buy-in, and they don't have as much understanding of well, maybe I would have assessed myself somewhere differently. Maybe they didn't identify a gap, but I
Right.
would have. Did they ask the right questions? And so by giving them their own framework and then by challenging them on how they interpret it, it really becomes a custom roadmap and a custom tool for them to lean into, to drive the cultural change that they want to see in their institution. And by giving it to them and them having access to it in an online tool, they can say, okay, I'm really at a lower level of maturity right now. I'm not trying to jump over the Grand Canyon here. I'm not trying to go to absolute perfection, but I want to show incremental progress over the next 12, 24, 36 months. So why don't I go ahead and set my bar one level up? And the way that the criteria works inside SRA Watchtower's risk maturity framework tool is that they can clearly see, what does it look like to close that gap? Does it mean that I have 4 meetings a year versus monthly meetings? So are we going from moving quarterly to moving monthly? That's an easy way to say, how do I close that gap? How do I make that a mature, more engaged, more active process? And so they can then create their own action plan of what they're going to do and over what time frame that they intend to move those. And as they close those gaps, they may change their desired maturity to one level up again and just continue to make it an iterative process and continue to mature.
There's two themes I'd like to pick up on there. The first is data and benchmarks. I'm going to come back to that in a second. The other one is the concept of a fresh external perspective, and frankly, whether that is a gap assessment conducted by a third party or whether it is a self-assessment, you're using a tool set. You've got someone else involved in that conversation, and I know that there are a few instances where I think you said folks pointed out to you that they needed a fresh face in the building in order to be heard.
Absolutely. So let me lean on the fresh face part first. So, a lot of times you may have a situation where you're new to that role. So if you're the chief risk officer, or you're new in the risk space, you're coming in, you're evaluating things differently, you're having a fresh perspective, but you don't necessarily know all of the factors going on, around the other areas of the institution. So you may not quite have the political capital to drive change. And it can be helpful to have an advocate on your side to articulate what it is that needs to be done based on how other institutions are approaching that in the industry, based on similar sizes or not, or based on that person's background. So it can be helpful to have someone on the outside helping to support of, no, this isn't just one person's opinion. This is based on a broad set of data, and it's really a data informed decision and approach. Similarly, you may have someone who's been there for a very, very long time. And we had a conversation recently that said, we've always done it this way. We want someone to come in to say, have we missed anything? Have we really uncovered and thought about it differently? Have we challenged ourselves, or have we just gotten comfortable? We want someone to come in and poke around a little bit. So whether they're new or whether they're very long tenured, there can be pros and cons and risks and benefits on either side to having someone join you in that conversation.
You mentioned data there, and that was the other part of the equation, right? It was the external perspective, but then it was also really having data at your fingertips to substantiate your position. So, one of the things that I know that you encountered was that you've found risk leaders that are facing internal headwinds to secure their investment in risk management, right? They don't have internal buy-in, they don't have a budget, they've got competing priorities. Expand a little bit of, if you would, on those headwinds, and then let's get into this concept of utilizing data to attack those headwinds and confront them and make your business case.
We hear over and over. I'd like to say that at some point I'm going to hear it all and see it all and have done it all, but people keep surprising me. But the one very common theme that we hear is that I really want this. I know that this is the right thing to do. I'm trying to drive change, but how do I sell this internally? So when you have access to data can speak volumes. Having an industry standard framework to say, this has been used nearly 100 times, and here are the factors that we've assessed ourselves, and here's the outcome of our internal assessment, but also here's the peer information from this other population that says, here's what they're doing, we're behind, or we're on track, or we're ahead. And when you think about that from a strategic perspective, you can't always compare size to size. You may have a bank that is 300 million or 600 million doing something that is equivalent to the complexity of a $10 billion institution. So purely looking asset to asset is not necessarily the right yardstick or barometer. So being able to compare yourself to varying asset size groups based on what your complexity or your strategic direction to be can be a very meaningful part of your messaging to try to drive that change. You say, here are the factors that we considered. Here are the factors that other institutions like us have considered. Here's where we fall in alignment with them.
Those benchmarks then that you're shooting for, right? They should be regulatory informed, and they should be quantitative, and then you have your self-assessment versus that benchmark, but then you have a set of peer behavior that gets aggregated, and now you have the ability to triangulate between a regulatory informed target and where your peers stand and where are you versus those two thresholds. That makes a pretty compelling and powerful business case when you're trying to go in and you're trying to get people to buy in, to participate. And you can point out, you shouldn't just be comfortable with the status quo, right? We need to enact change here, or we need to find new budget for this, or this needs to move to the top of the priority list because look at where we are versus everyone else and where expectations are that we should be.
Absolutely. And really at the end of the day too, by engaging in this as a self-assessment, that this looks and feels like you as an institution. It's not someone coming in who doesn't know you. It's not someone who has missed asking a question. It is really, truly customized to your experience and your intimate knowledge and your interpretation of those various factors, but then applied against a wide set of other peer institutions who've engaged in the same exercise.
Niki, I think this is a really powerful message here today of anyone who is caught in this position of how do I move forward? How do I get buy-in from my risk program? Consider utilizing a third-party diagnostic, but one that is self-assessment driven, right? That is you truly own, and ideally something that can persist and live on after that initial assessment is complete and can grow with you and grow with your program over time. Niki, I'm sure you'd be happy to discuss this topic directly with anyone who wants to dig into it. So hopefully we'll have a few knocks on your door as a result of this conversation today. Thanks for the perspectives.
It is my favorite thing to talk about. So
thanks a lot. Appreciate the time.
Absolutely.